The truth is most ICT traders are going to fail before they really even end up getting started, and that is largely due to them overcomplicating almost everything. I've gotten over 5 million in funding across various different prop firms, and that was not due to me mastering every single ICT concept down to the bone and combining everything at every which time. It was down to me simplifying my model. And market maker models are something that people get intimidated by a little bit. They might look really complicated, but actually they're one of the most simple concepts that you can really learn. And odds are you're probably overcomplicating it already. But this is exactly how I simplified it to get that much in prop firm funding. So we're gonna go ahead and dive into exactly what a market maker model is to start off, okay? So basically, you're going to have two things. You're going to have one, your buy side curve, and two, your sell side curve, okay? And same goes if you are bullish, okay? This is your sell side curve. This is your buy side curve. All right, let's just start with this example. So what does your sell side curve look like? It's going to look something like this, and we're going to label it after we draw it out. So you are basically in a bearish trend, continuing lower. Here's your reversal, continuing back up. And I'm sure you've seen something that looks much like this, probably on Twitter, Instagram, whatever it may be. Okay, now what the hell does any of this actually mean within here? Because it looks like a bunch of just scribbles and lines. Okay, so we're going to go through and start labeling this. So first, right here, the start of that sell curve is going to be our selling climax. Okay, this is where sellers are starting to get exhausted. Now, generally, when you are trading within a market maker model, you will already have either your sell side curve or your buy side curve put in, and you're trying to trade the other side of the market. You already have this information, but this is your selling climax. Now, in a sell side curve, this right here is called your first reaccumulation period. So let's go ahead and type that out. Reaccumulation, first reaccumulation. Okay, that is basically big players not filling their big orders yet, waiting for more liquidity to get added into the market. Okay, now right within here, we are going to spot a relatively large fair value gap that has been untouched. Basically, it has not been mitigated yet. So this is our fair value gap. This is our first manipulation leg. Okay, now does this look a bit familiar? These reaccumulation legs, majority of the time, at least the ones that you want to trade, are going to be power of threes. And a power of three, if you don't already know, is just accumulation, manipulation of those accumulation lows, usually to grab some liquidity, and distribution. Okay, so we are basically looking for PO3s, but that is our first reaccumulation. This is our first manipulation. Okay, manipulation right here. And this is your first distribution leg right here. We can mark it out in, let's do purple. Okay, distribution. All right, and now you can have a couple of these legs. Not all of the time will you get a manipulation. Okay, sometimes you will just basically have a reaccumulation range with no manipulation. Okay, now if I'm trading one with no manipulation, I probably look for an SMT, but we'll get into that in a little bit. This is basically what these little sideways legs look like. What are these? They're reaccumulation legs, or PO3s. All right, now at the very bottom here, we're going to draw out this big block. Can be a fair value gap, but basically this is just going to be our high time frame PD array, key P level. All right. That is where a sell side curve actually flips into a buy side curve, okay? When you put in a high time frame PD array. So what do we actually call this? The reversal right here. This is called your SMR or smart money reversal. Okay. Now, we won't always get to trade these, but these are usually the ones that catch the biggest moves, all right? But you have to identify when the bottom is put in. But basically, you know when you're getting a smart money reversal when you have one of two things, okay? First thing being high time frame PD array tapped, okay, which is usually like daily gap, weekly gap, 4-hour gap, sometimes a 1 hour, depending on what time frame you're trading the market maker model on. So one, high time frame PD array plus PO3 flipping. Okay, you have to have flipping. You have to have a PO3 flipping, meaning what do we have here? We have bearish PO3s, right? Accumulation, upwards manipulation, downwards distribution. Same thing here. Accumulation, upwards manipulation, downward distribution. What we're really looking for is to have an accumulation right here, a downwards manipulation into said high time frame PD array, and then an upwards distribution. This upward distribution is what tells us we are actually flipping from bearish to bullish, okay? Now, when you get really good at spotting market maker models and you combine this with a ton of other confluences, sometimes you can get your smart money reversal entry within here. Maybe a 5-minute inversion for value gap, okay? But if you want to trade market maker models safely, I would say 80% of the time I'm trading a market maker model, I'm probably catching the first reaccumulation leg after a smart money reversal, okay? Which is no different than the first reaccumulation leg here, right? It's the same thing. We will accumulate, okay? We will tap into a significant fair value gap that was created from the displacement or this distribution leg, okay? This reversal back to the upside that had all your market structure shifts, everything, that's going to leave behind displacement or a fair value gap that needs to be rebalanced. So you manipulate into said fair value gap, and then once you get a confirmation out of that, like an inversion or a change in state of delivery, that's actually where you're going long. So basically, all market maker models is just longing pullbacks, waiting for pullbacks to happen and continuing to trade with the trend. Okay? Sell side curve, buy side curve. Now, what are going to be your targets? Okay? Now, when I'm trading market maker models, the ultimate draw on liquidity, if you are bullish, is going to be your selling climax. Same thing if you had a market maker down to the back to the downside, this would be your draw on liquidity, is the buyer's climax. Okay? But selling climax, okay, that is your ultimate draw on liquidity. So that's usually where I like to have a take profit for sure. Okay? That's where I like to take a lot off the table. If I'm expecting a ranging market, if I'm expecting a really gnarly trend, then I might take it a little bit longer than that. But I always like to trim at the selling climax. Now, let's say, for example, I'm going to be long at the smart money reversal. And this is kind of way too high of a risk reward for me, right? I think, okay, maybe there's not even enough time in the day for us to get all the way up here because it's, however many ticks. Our take profits can be these reaccumulation highs. Okay, reaccumulation high there, reaccumulation high there. Now, also, these reaccumulation levels can sometimes form really strong order blocks. So if you see a high probability order block that's been retested already, then you might want that as a take profit, okay? But again, all market maker model is essentially PO3s. This is why I hold so much importance over PO3 and base my entire time-based model off of it, because that's exactly how the market moves, okay? It is such an important thing to understand. If you don't understand PO3s, then I would highly recommend going down below and getting the PO3 entry model checklist. It's going to help you so much. It's literally my model completely simplifies the entire thing. So basically, we now know exactly what a market maker model looks like on paper. So let's go ahead and look at the actual chart at some examples. So right here, this is a bullish one, okay? So ton of sellers step in, right? Okay, this is the climax that sellers are over. This is basically buying climax, all right? This is where buying is likely to start and sellers are likely going to basically chill out, okay? So climax is right there. What do we see after our reversal? We do see a pullback, but that one wasn't super clean. Let's take a look. So we clearly have some accumulation right here after our reversal and displacement. Then we see a manipulation right here and a change in the state of delivery. So that's a market maker model PO3 where I'm going to want to go long. Now there's not really any targets within here, so you can do things that I'm not really going to cover in this video, but Fibonacci retracement, this is just shit you do when you're trading at all-time highs. So we can take it up to there. But anyways, let's get rid of all of that. Okay, we can see, again, the market maker model play out right here, right? We accumulate, we rebalance into an unmitigated fair value gap, and then we see another push up, okay? Now, all-time highs, there's not a high time frame PD array for us, okay? This is where price happened to reverse, likely off of a standard deviation. But assuming this is a high time frame PD array, this is where our reversal is, okay? Let's dip down to the lower time frame to see if we see anything. Okay, boom. Clear reversal. We get accumulation, manipulation, distribution, right? The PO3 flipped from bullish to bearish there. We have a crazy strong distribution leg. What did that leave behind? Left behind a massive fair value gap. So what do? We manipulate into that gap, grab some internal liquidity too, and then see another CISD back to the downside. Okay, boom, again. Now, like I said, there's not always going to be a manipulation within the market maker model. When there is a manipulation, those are kind of the ones we want to trade, all right? For this example, okay, probably wouldn't have wanted to catch this leg, right? We didn't go and manipulate into a gap or really grab any liquidity. We did grab a little bit of liquidity if this is your accumulation range, but not much. So let's see if we can potentially find another one here. Okay, this is a super clean one, right? We, again, accumulation, manipulation into a fair value gap that has not been touched in before, and then boom, instant massive candle to the downside, change in the state of delivery, and obviously we're on the daily time frame right now, so you probably find your entry even somewhere around up here. And where can we target? We can target that climax where the market maker buy model actually started, and as you can see, that was the clear drawn liquidity. Again, another smart money reversal right here when we hit a very key level. Another rebalancing. Okay, this one was a little bit longer because of all the global stuff that's going on. But you can see, you guys can go on the daily chart, the hourly chart, the 15-minute chart, the 1-minute chart, and try and draw out market maker models. Okay, this is something that's going to help you so much with your technicals on the chart. Basically trading almost everything as a market maker model, not forcing it when it's not there, but this is an extremely helpful concept, especially for mastering the PO3, okay? If you can combine a smart money reversal or a reaccumulation leg with the opening of a 4-hour candle, that 4-hour PO3, like the model I specifically trade, that's how you can master the way orders are actually filled and be on the correct side as institutional traders almost every single time, okay? You pair that with proper discipline and proper risk management, you're going to be in a really good spot. Now, if you are interested in getting one-on-one mentored by me to master this strategy in itself, and not only that, how to use it to scale up to 5-figure months with prop firms like I have then just go ahead and click the first link below. We have opened up 7 spots for the month of July. So if you are interested, you can book your interview call below. I hope you guys got a ton of value out of this YouTube video. Let me know in the comments if this did help you and what you might want to see next.